Fine. Is it? What we have to say, inherent risk, is it? Inherent risk is nothing but when they don't have any related controls. Is that when you don't have any controls, automatically the risk element will increase. Is it? The risk element is increase. What it says, this one we have to make sure that how best we are going to work it out with this one. Okay, inherent risk is nothing but an assertion of misstatements. Completeness, cutoff, I have written completeness, cutoff, valuation, accuracy. Is that? These are the various types of assertions we are having. It will have misstatements, whether it is individually or with respect to the aggregate. Aggregate means total average. Is it? Assume that there is no internal controls. Fine. Now, that's why. How we will have inherent risk, management integrity. Definitely, management is not that much straightforward. We are not having a proper judgment. Is it right? It makes a miscalculation in terms of judgments. Is it right? Where the integrity, where there is a cash involved, you have to be very careful. Is it right? We have to be very. What happens whenever there is a cash transaction? You will assign that job to a person who is having a high integrity. Is it right? And whenever you are talking about the technology, we have to be very sure that how the technology has to be assessed. Okay, and we have to evaluate it. The second part we are talking about the control risk. Is that it will not be prevented or detected or corrected on a timely basis. Is it? What is the control risk? See, controls are very important. When you are doing the things, the entire audit is based on the controls. Is it? They're based on the controls. Wherever you are talking about, we are taking controls in terms of one. I told you, one will prepare, one will verify, one will approve. Is it right? The systems will be there. When you are receiving the goods, one will receive, one will count, one will sign. Is it right? You should have more than one person to oversee the activity. That is the basic concept of a control. Is it? We will cover this. How the controls are there and how you have to test the controls also. That's very important. You should not only have the controls, but you have to have a test to controls also. What are the controls you are doing? Reconciliation, basic thing. Bank reconciliation. Why you do bank reconciliation? Just to make sure that things are as per the requirements. Is it right? You are matching. Is that you are comparing? You are matching the invoice with the received notes. Is it right? That's very important. You are talking in terms of as simple as that. You have the computer passwords. It is a control, as simple as that. Is it right? Nobody can access our systems as such. Is that OTP is a control, one-time password. Is it right? That's the basic thing with respect to the controls. Is it? Now, what is the detection risk? Detection risk is we cannot detect it. Is it right? How it will happen? How best we can overcome this? See, in the audit, always there should be some solution. That's very important. Is that as an auditor tomorrow, you should not say that I don't have any solution. You should create solutions. You should create some way of collecting the evidence. Understand what? You should have some way of collecting the evidence. Very important. Is that? And how you are collecting the evidence? You will have various different options. Is that? Auditor will not verify, will not vouch each and every transaction. Auditor will only do a sampling of transactions. Is it right? When you are doing the sampling of transactions, fine. It's a big, huge company. Is it right? You have lot of branches. What is it? Take one branch or take all the. Even you take one branch, what will happen? Assume there are 10,000 transactions are there. What you will do? You will say that I will verify 100 transactions. You are always have a professional skepticism. You should always think out of the box. You should always think where the things will go wrong. Understand? Always think. That is you have to add what is the audit risk. That's very important. And what is your response? Correct? Always you say you have taken 100 transactions. 100 transactions may be fine, but if you don't detect any error, any misstatements, then you have to increase to 200. You have to increase to 300. Unless until you are satisfied, then only you have to move to the other one. Is that detection risk is because of sampling as well as non-sampling. Fine. Now, that is the only thing the auditor will have in their hands. Is that it is at the judgment of the auditor that how many samples you can take. Is it right? Nobody will stop the auditor from that. Is it right? It is, if it auditor thinks that yes, I want to take 500 transactions out of total 10,000, he has that authority to verify 500 transactions. Fine. This is the first component of this lecture, that is audit risk is nothing but the inherent risk multiplied by control risk multiplied by detection risk. Fine. Now, when we go further, is it? When we go further, we have to know how best we can work out with the materiality. Is it? Materiality is nothing but what is the percentage of error misstatements. What is the percentage of misstatement? See, misstatements will occur. There is no doubt on that. Is it right? Misstatements will be there. We cannot say it is 100% clear. Is it right? But misstatements should be within the limits. That's very important. When we say it is the limits, fine. In the next few slides, we will cover that. There is a benchmark that has been given. In the examination, they will assess us on this. Is that if there is a question on this, definitely they will you assess us whether the misstatements is within the range or within not the range. If it is within the range, again you have to discuss. Always make it a point. There should be a channel of communication with the management. I told you, charge with governance. Is it? Charge with governance. You have to discuss with the people who are charged with the governance. Materiality. How much is the percentage of misstatements? Overall materiality, performance materiality. Performance materiality, when you are talking about the performance materiality, you are talking about the smaller misstatements. Is it? You are talking about how the smaller, that means individual. Is it right? How the smaller misstatements in terms of individual account balances. Fine. In terms of revenue, in terms of profit after taxes, in terms of assets. Is it right? In terms of inventory, in terms of receivables. Is it right? These are the things where we have to be very clear in terms of performance. What is the performance materiality about individuals? Fine. Next, how the materiality matters. Materiality matters is how it is going to be impacted on the judgment of the audit. Is right? 1 minute. Just I will take 2 minutes and we will have break for the prayers. Now, when we do the things, materiality is an expression of relative significance. When you are talking in terms of relative significance, is it? Relative means in terms of percentage only. Is it? In terms of percentage only. What is it? Means percentage of revenue. Is it? In terms of percentage of profit after taxes, percentage of assets. Is it right? This is where we are talking in terms of the relative significance. In the context of financial statements only. Fine. Misstatements are considered to be material. Material means definitely it matters. If it is going to be 20,000 reals, we cannot say 20,000 reals. We have to say that 1% of revenue. Is that if whether they are doing individually or they are going to have an aggregate. Is it? And it should affect, it should have an impact on what? It should have impact on economic decisions of the users. Fine. Economic decisions, basically it will have impact on profits or losses. Okay. Now, four people are there. Four people will have different views. Is it right? Four people. What the auditor will say? Auditors are basically, one of the limitations of the auditor is that they have the judgment. Their own judgments will be there. Based on what? With respect to the surrounding circumstances. Is it right? It takes about your own judgment. You cannot say that, for me, 1% is less. For you, 1% will be more. Is it right? For you, 5% will be more. For me, 5% will be less. Likewise, again, what happens? You are working with an international agency. Is it right? You are working with a bigger organization. The revenue will be more. Is it right? You are talking about A. Is it right? You are talking about A. You are talking about company B. A, what we are saying? We are saying it is going to be 100,000. You say 1 by 100. Is it right? 1%. How much it will come? It will come 1,000. Is it right? Now B is how much? Assume B is 500. Is it right? 500,000. 1% if you take, it comes to how much? It comes to 5,000. Is that now it's your judgment? Is it right? Here 1% is materiality is how much? 1,000. Here the 1% materiality is how much? 5,000. So you have to differentiate. It is up to your discretion. Is it? Sometimes what will happen? Here 5,000 is more material. Is it right? 5,000 is more. But what will say? Depending on the circumstances, revenue, you are comparing with revenue, 5,000 is less than 10%. Sorry, 5,000 is less than 1%. But if you compare with the revenue, is it right? This is going to be how much? 5% of revenue. It is material. This is only 1% of revenue. Is that? This is only a 1% of revenue. This is not material. Is it right? Is it? This is not material. That is why we are talking about the judgment about materiality are made in the light of circumstances. And affected by what? It is affected by the size and the nature of misstatements. Or sometimes we are talking in terms of both. Is it? We are talking in terms of both. Now, judgments about materials that are material to users of financial are based on what? Consideration of the group of financial information. Means it is all subjective. Is it? It is all depend on the situation. So don't, in the examination they will ask you this. Unless without making a calculation, we should not come to a conclusion. First you have to do the calculation. Subsequently you have to do then based on the calculations you have to make a conclusion. Is it? Material is a matter of judgment, as simple as that. And depends on the audit risk. If the risk, what happens? If the higher the audit risk, is it? The lower the material. If it is saying that the risk is high, is it? A risk is high. If audit risk is high, what happens? Materiality will be very low. Amount will be very low as such. Value will be very low. Definitely, is it? That is the reason you have to make sure. What you have to do? You have to make sure that they have the lower level of acceptable errors. Is that? You have to minimize it to the extent possible. Is that? Or we should not make sure that audit risk is high. If audit risk high, definitely what will happen? It doesn't make its reflection. Materiality is calculated for what? For the financial statements only. Is it? Performance materiality is calculated for the class of transaction, balances or disclosures. When you say class of transactions, again, it is nothing is there. It is with respect to revenue, with respect to profits, with respect to assets, and so on. Is it? Again, there are so many, 4 or 5 are there. Is it? Throughout the audit, materiality is the intention of the auditor is to make sure that they should be related to the percentage of misstatements. The job of the auditor is to only identify the percentage of misstatements. Is that, see here I will complete this, and we will have a break. See what the rule says. Is it right? See, this is a general guidelines. Okay, this is only a general guideline. Profit after taxes maximum, what should be the material misstatements? 5%. Gross profit 0.5 to 1, because gross profit will be more. Is it right? Here the gross profit amount will be more. Here the profit after tax amount will be less. Is it right? Now that's what it says. Is it? Gross profit, if we take profit after tax is 10,000. 10,000 into 5 by 100. It comes to how much? It comes to 500. Gross profit amount will be more. Is it? Assume it is going to be 40,000. Take an example. 1 by 100. 1%. It comes to how much? It comes to 400. Revenue. Is it? Revenue will be much higher. Is it right? Revenue will be 200,000. Assume, take an example. Is it right? You will have revenue is 200,000. Then you will have the cost of sales. All. Assume revenue is how much? 201%. Is it right? It is going to be how much? It is going to be 2,000. Check calculation. Is it? Profit after tax. Is it? Profit before tax and profit after tax. Example. Most of the time we will take this profit after tax. Is it? Compared to this. Is that? Compared to this we'll take. Then what they say it is a 10%. Is it right? Next, profit after tax, definitely it will be less than before tax. Is it right? Assume profit after tax is 5,000 into 10 by 100. Is it right? Into 10 by 100, it comes to how much? It comes to 500. Total assets. Is it right? Just I am taking what I want to make sure that I just want to make sure this is what called as a materiality. This amount is you will have lot of confusion. What is materiality? How it is going to be worked it out? Is it? This is where there is a misstatements. Now you have to take into consideration the percentage wise, plus you have to calculate in terms of amount wise also. This is the relative, this is the absolute. Fine. Likewise, you will have for total assets, you will have net assets. Most of the time, where we are going to focus, we will focus on the revenue, we will focus on profit after tax, and we will focus on what? Most of the time, net assets. Is it? Other things will be there. This they will not give us. Understand? This they will not give us in exam. By practicing again. Is that the moment, keep it in mind when we are doing the things from here till the examination, till all the revision, all the classes, you should get it on your fingertips. On your fingertips. Revenue, it is 1%. Profit after tax, it is going to be 10%, 5 to 10%. Is it right? Total assets 1 to 2%. Is that this? If you have these things in your, by doing practice, you will come to know about this as such. Okay. Once we come back from the break, we will focus on the performance. See, if you take into consideration what you are doing, we are talking in terms of individuals. Is it right? Individuals with respect to the each and individual. This concept, is right? This concept, when you say the things, is it right? This is not overall materiality. This is with respect to performance materiality. When you come back after the break, keep calculator with you. Okay? Inshallah, we will work.